Hello, everyone. This is Jim Kwock, and this is the Jim Kwock Podcast. Today, from lovely Honolulu, Hawaii, with Tahiti in the background, I have a really good friend, Irene Zhang, from the Bay Area. She actually works for Juniper Networks, which is a high-tech company that I used to work with actually in my prior career. So that's how we initially got together, and she has a really, really interesting story, and I'd like to just have her tell it today. So Irene, why don't you tell us a little bit about your background and how you got into Sub2?
Sure. Thanks for having me. So my name is Irene Zhang, and I was born and raised in China. And then I came to the States in 2013 for doing my master degree of engineering management. I went to Dartmouth for that. And then after that, I started working in the Bay Area as a product marketer. And then I joined Sub2 about 3 months ago. And that's after 5 months after I bought my first primary residence in the Bay Area.
Wow, that's great. That's hard to do, especially now, given how expensive it is. I remember when I first moved to Hawaii, it used to be the most expensive state, and then California overtook Hawaii. So it's a big accomplishment to buy a home there. So
it is hard. And I would say that there are so many things that I wish I knew sooner. And there's so many things that I wish other people would know, right? That to afford it, you don't have to have 20% down. You don't have to have dual income, because I was a single lady and I'm still am. And there was so many times that I thought about, even my parents encouraged me to buy a house 5 years ago. And I regret I did not listen to their advice and thought that I need to wait for my husband, who know when will come, and then form a family and then buy a house. And of course, I've been waiting really more than I should. And also the other thing that is, it's not that I have tons of saving. In fact, I had saving, and then before I bought my house, about 15 months prior to that, I actually was scammed and lost all my savings. I literally lost everything.
wow.
Um, so that was a wake-up call for me to rethink about how I can treat that as a important and expensive lesson learned, and determined to rewrite my financial narrative in future.
Yeah, that's such an inspiring story, which is one of the reasons why I first got in touch with you as well. So, how did you pull it off then? How did you do something creatively to buy the house, or how
Um,
did you come up with the money?
yeah. So first of all, that was way before I joined Sub2, right? And then I look at all the first, I just knew that the house in Bay Area are expensive, but I never really
Yeah,
look at reference low. I never look at the number, and I never really look at how does it translate to monthly payment, right? So
right.
I've been living in the Silicon Valley for last 7 years and paying pretty high rent. And
Yes,
then I don't
very,
realize that, oh, actually, when you translate, the monthly
yeah,
mortgage, the PITI, that you realize it's not dramatic. I mean, it's still more than what I pay for as one person for a rent or apartment, but still it's not like 4 or 5 times more, right? And then from there that I realized, to do the math, okay, how can I pay those extra to, if I were to rent a that, and then the extra 2-3 thousand, where do I get the money from? And then as I listened to Bigger Pocket, that people pretty much all recommend, if you're just starting off, use house hacking. And of course, house
yeah,
hacking generally work in multifamily, more or
yes,
less. So initially, I was looking at multifamily, except the Bay Area, the multifamily, at least the number still is not great. And at the same time, the neighborhood and also a lot of existing tenants, that got me to pivot to decide that if I had the same money, I would rather buy a better condition single family house. And with the
right,
intention that house hacking, that I need a floor plan that is good, that 2-story, and then I live in a big room that can also have a bedroom and the home office, and then have the guest room to rent it out as midterm rental. So that's my strategy and how I afford. And then that's the first thing. Look at the numbers, and then look at the strategy with house hacking, and then not just house hacking with long-term rental, because I don't want roommate. I'm open to host people as guests, but not roommate as tenant. So there's a distinction. I can totally feel the difference compared to when I was in my 20s.
Really?
There's a big difference. And when you host somebody who come to here because their work assignment and all they come
Right.
is maybe just things that they can pack in their car versus a tenant that maybe entire storage unit who know like how
Right.
big, and I'm very
Sure.
picky about the design. So I don't want others come in and mess up my design and other things. So that's what I learned. And the other thing is I also pull money from my 401k that I didn't know that I could. And there's there's debate about whether you should or should not. At least for me at the time, I lost the scam that I was in. I lost 125 grand. So I
Wow.
really hard to put any money to put like down payment. And then for the 401k, then I know that I can put like at least 50k and then pay the
Yeah.
interest. But the interest
Yeah.
is not paying to anybody, it's paying to myself. So to
Right.
me, that's
It's
acceptable.
just opportunity cost. It's just opportunity cost.
Exactly. Yeah. So to me, like that is an opportunity cost that I'm okay with, right? Because the loss is that those money may not be continue compounding in stock market with ETF, but at the same time,
But you're in real estate though. You're in real estate instead of stock market. That's probably a
exactly.
better investment. Yeah.
Yeah, and especially like I don't have this house just for my own use, right? I'm also consider like house hacking, so it is also I would consider at least part of it is investment property, and I do have it does feel nice when you start getting those Airbnb payout. I would have to say that. Yeah.
Okay, so tell me a little more about that. That's really interesting. I do understand the idea of midterm rentals. In fact,
Mhm.
it's a class of real estate investment that I'm interested in.
Yeah.
But what you just said something that was new to me that I haven't heard before,
Mhm.
which is when you have a midterm rental, it doesn't feel like you have a tenant.
Yes.
Can you tell me, and why is that? Is it because how short? What's the duration? Is it usually a
The
month or 2 months or?
Yeah, the duration is 30 days or more, right? So at a glance, it feels like, well, how is that different than a tenant?
Right,
The
right,
difference is a few things. One is it's furnished, and I
right,
intentionally spent quite a good amount of money furnishing in a very nice condition. And when I put it on Furnish Finder and Airbnb, it is not on the mid or low end of the price. So I know that people who are willing to pay for that is not gonna it's less likely to be squatters. That's
right,
that's that's the first thing that I position it as more of the mid to high end because of the price point and also the amenities and the design that I put in. And so I it's very intentional for me that who I want to attract, right?
right.
And
So you
then
can
Mhm.
you can attract a certain class of renter that's
Yes.
going to be more compatible with you,
Yeah.
and get the rate you want too.
Yes.
With and then you don't have to worry about eviction, which is the biggest problem with long-term rentals is having to evict somebody who's a squatter.
Totally. And totally, right? And especially when you operate property in California, it's
Yeah,
very concerning.
yeah,
But honestly, um, it would be really bad luck for any like for me to encounter a squatter that would bid for like really high price for that. I would imagine like they would more looking for rooms that are already positioned pretty low price that they might go in and squat there. And then the other thing that at least I operate for a couple months, the people who stay, I don't know whether it's a coincidence or not. Everyone stay here, they already are homeowner in another state. They have house
right,
in another state. So they just come
right,
because they have a work assignment or somebody that, they just finished certain they just want to come here for like a month or two to learn about this area, decide whether they want to buy a house. And then initially, the other thing that I learned is I thought that I am going to attract travel nurses, but none of
yeah,
my guests have been travel nurses, interestingly. But they are all great. They're super, super respectful, keep the place super clean and super quiet. And I think that is
that's great.
maybe something about like they are already homeowners, so they kind of have a habit of taking good care of the house in general. So I'm grateful that maybe it's just my luck or maybe it's the people that I intentionally attract.
Well, you're there as well, so they can't hide anything from you.
Oh, for
So
sure.
that's really good. So
Yeah.
I have some experience in that. So
Mhm.
what my core business that I operate is a vacation rental business, right? So
Mhm.
I probably do 1,000 weeks of rentals a year in vacation rentals, which are short-term rentals. And what I was when I first started, I was collecting security deposits because I was worried that they were going to damage the property, but they
Mhm.
hardly ever did. Almost never was there any damage to a vacation rental. And in fact, I just stopped collecting security deposits after about a year of doing it because I never had any damage. And I would say doing 1,000 rentals a year over almost a 20-year period, I can count on two hands how many times I had a problem with a renter doing damage to the property. 10
That's
times out
great.
of
That's
maybe.
amazing.
It's amazing. And so as a result, I mean, you could actually literally you could charge people $25 just for security deposit, and you could
Yeah.
just make money on that because you never have any problems, right? So yeah, I mean, that's another source of income if you want to do that for vacation rentals. So what you're saying is for the midterm rentals, there's some of that benefit where you don't have to evict the employee. I mean, not the
It
employee, the
it's
tenant.
well, technically, legally, for the state and law, there's no when it's over 28 or 30 days, it's already considered a long-term tenant. So for those states that are very protective for tenant,
Tenant
still
friendly.
there still could be the risk of someone squat there. It's not like
Yeah,
zero risk, but
it's
when
harder.
you position it as a higher price, that it does filter people in certain way. So I would say it's that. And when you invest in properties, that don't be afraid to command a little bit higher rent or the fee, like as you invest in positioning, like what is the design, the amenities. So if we think about marketing strategy, right? What's the customer segmentation? Who are you? What's the target audience that you read the niche that you want to attract?
That sounds really great. So do you plan on that? That sounds like the perfect strategy for California. I mean,
Yeah, yeah. And then I just acquired another property in Florida.
oh
And so
wow. Oh nice.
right now in the process of turning it into midterm rental. And that property is my first investment property, and at the same time it's my first sub-2 property that I bought.
Awesome. So where did you buy it? I'm very familiar with Florida since I lived there and I'm
It's
a broker
in
there.
Cape Coral.
Okay.
Mhm.
It's great. So that's a vacation destination. So, but you're going to do midterm rentals. Do you
Yes.
have? Tell me about how you selected the property. Did you select it because it was a good deal, or did you select it because of its opportunity for
It's
midterm rental possibilities?
so a few things that I look at. One, so it does meet my buy box in terms of the total entry cost. And then when I look at the location, it is within 15-minute drive to some
Hospital?
hospitals.
Yeah.
Yes. And then the third is I do like markets where the STR are allowed, so that
Yes.
I primarily want to operate MTR, but then in between, like those monthly
Yeah.
booking, that I can use
Yeah.
STR to minimize the vacancy, which I legally I couldn't really do in the Bay Area for most
Yeah.
cities.
You can in Florida. Yeah. Yeah.
Yeah,
Yeah.
and then the
It's
other
it's
thing
good.
that I run the numbers that make me feel comfortable about is, even though the house in terms of purchase price is probably the most expensive house in the neighborhood, but at the same time, the good thing
Most
is
bedrooms.
it's a 4 bedroom, 2 bathroom. But the nice thing is the previous owner, actually, the previous owner already convert the garage to a studio
A room.
with private
That's
entrance
great.
and things like that. So to me, it's when you operate MTR, having a private studio is pretty attractive.
Hmm.
And that's the lesson that I learned when I'm renting out my, bed guest rooms in my house. A lot of travel nurses really don't want to share a room. And for those that
Yeah.
are
I
willing
don't
to pay
blame
a
you.
little bit higher price, that is an absolute no-no for shared bathrooms. So
Right.
that to me is a better condition. So it's not exactly duplex, but given the price and then have the main house 4 bedroom, 2 bathroom, and another studio, it is
It's got
when I
two
run the
doors
numbers.
basically.
Yes,
Two
yes,
doors
that it
minimum.
conservatively speaking, that I would not lose money regardless. And the upside, depending on how I land the contract with people, that the upside is huge. So to me, it's a relatively low risk to pull the trigger.
Okay, so the way you underwrite it then is you look at how do you underwrite it? So you have a certain entry cost, and then you do a worst case scenario where you say, okay, what if I only get this? Do the numbers still work? Is that how you minimize it? Okay.
Yeah. So I of course I look at the comms. I use MassRiser to look at the LTR, MTR, and STR comms. And then also look at, okay, the worst case is fall back to long-term rental, right?
Right.
And then look at the PITI. So if I'm not paying
Right.
for anything and then just have the month long-term rental, will I break
Right.
even? I don't
Right.
anticipate in Florida. I actually don't anticipate that I would have positive cash flow with LTR, to be honest.
Right.
But if it's break even, to me, it's already a pretty good safe bet. And then for STR, MTR, right? And unless I really operate super terrible, right? Otherwise, then look at the average number in the area. That as long as I operate, even on average level, that I can, like, how much, like, that I can have the profit. And that, to me, just running all the scenario, that seems like, okay, the worst case scenario still, that it's not going to be that bad, and then the upside is pretty high. So yeah, it's a very quick for me to say, let's do it.
Right. I have a similar, because I do a lot of PML, as you know, and I have a similar philosophy, especially when I'm lending out other people's money, right? So you have to say, okay, what's the exit of last resort? Let's say your operator can't do what they said they do. What's the worst case so you can get the operator out? Well, oftentimes just a long-term rental is the worst case. So I say, okay, let's run the numbers with the worst case long-term rental and make sure you've got fully funded reserve, you got property management in there, and you've got vacancies accounted for. If you can do that and you're not losing too much money, right? It can be negative cash flow, but if you're not losing too much money, then you can weather any storm that you might encounter, and operate as a long-term rental and use that as a way to get your investor out. Because if you can't get your investor out, then you're going to get no more investors that are ever going to work with you.
Oh yeah, right? And I'm happy to share, like, just like the high level numbers, right? The PITI is about 3,900. And then the studio, and in fact, the owner's son have wanted to rent it to January until he finished school, and he's paying us 1,500 just for the garage ADU. So that give it to me that, okay, so I will assume that they are not overpaying over market value there, right? So 1,500 for that, and then for a 4-bedroom, 2-bathroom, there's no way that it would rent less than
3,000. Listen.
Yeah, exactly. And then I look at Furnish Finder. Most comms, even for the lowest one, at least 35, and then there are several that have 5,000, 5,500 to 6,000, and I even say one that is pretty high end to 8,000. Right, so I'm taking out the highest, I'm taking out the lowest, and the most would be around 5,000 to 6,000. So to me, okay, I feel pretty comfortable. Just look at the several comms are within that range. So yeah, that's how I think the risk is really relatively low.
Okay, I'll tell you what. I just got presented an opportunity here in Hawaii Kai, where I live. And it's a multi-door property. It has 3 separate units, and it has probably 8 or 9 rooms. I got to look at the details. Right, that's good. If you can rent it by the room, and if you can get $1,500 to $2,000 per, right? Because it's a nice area. It's in a nice area with a nice view. Right? And that's very highly prized in Hawaii. I'd like to see. I'd like you to take a look at it, and maybe we can do a JV on it, because I want to get into midterm rentals. I got presented this. I looked at it and going, "Oh wow, this looks pretty decent, right?" And if you can run it through your model to see if this kind of thing works, because nothing else is going to work in Hawaii, right? You have a $1.5 million house that rents for $5,000. That's never going to work. The only way it can work is if you shared it, right? So you get a 4-bedroom house. If you could you'd have to do $3,000 a room for a 4-bedroom house in order for that to work. That's pretty high.
It is.
And
And
that's why Hawaii is so hard to pencil in.
the way that I see about midterm rental for like a sustainable model, right? One is buy the room, and I would have to say like it's not as easy, right? I said that I operate. It's not that easy to consistently having it
Right.
occupied, especially when
Right.
you are positioning. And part of it, I think, is me for my own primary resident. That is the hardest, just because I have two
Your
cats,
standards are
and
high.
there's so
Oh,
many
yeah, cats.
traveler have pets that I have to say no to them. But
Right.
for other house, probably a little bit easier. And the second thing is back to the MTR. I think A is the pet split model, the co-living, right? That the management overhead is a little higher, but definitely doable if it's near, let's say, college town or near certain place, depending on the neighborhood and what that is. That makes sense for several people, like okay to live together. And then second is that if the property have like land contract with the B2B side, where whether it's insurance claim or corporate recruiter to relocate corporate
Right.
executive, like those
Right.
are usually like pay really
Yeah.
premium.
Yep. I had one of those once. So
Yeah.
when I so I was telling you about a time I got recruited. It was the Stratacom was um, the former Stratacom CEO was the chairman of the board of this company,
Hmm.
and they hired an executive placement person to look for homes, and this was in 2004, and they found a home for $6,000 a month. This was in 2002, right?
Yeah.
So 20 years ago, 6,000. I said, that's a crazy amount of money for rent. Now it's like, oh, that's average. That's a 2 bedroom. But this is way back then for a house. I go, wow, oh my
Yeah.
God. It's
But
like,
the nice thing is that it's coming from those budget, right? Like the corporate budget,
yeah,
whether it's the insurance company or the corporate hiring budget. That $6,000 a month is not like, for many companies, it's not like a huge budget, right?
it's not.
For
It's
those
temporary housing
population. Yeah.
until they can
So
get into a permanent situation, right?
yeah, for sure.
Yeah, if you can get into that, that's good. So what do you think are the highest? I mean, you've researched it. You found some properties.
Mhm.
Doing your own house hacking. But out of traveling nurses, college, right? College midterm rentals. I mean, that to me, college midterm rentals is the most obvious because I have a son in college, and the amount they charge them for a single room is like ridiculous. I mean, it's just unbelievable how much they charge, right? So I'm thinking now, college students, they don't really take great care of the
Yeah.
properties, but they pay a lot. So I was wondering, what do you think? What would be your favorite?
Not necessarily my favorite. Well, I do have a favorite segment that I want to get in, right? But it would take a little bit more time and network to build those connections. I think the most
Mhm.
lucrative it is the insurance claim, and
Oh,
those
like in
usually.
Hawaii, right now in Maui.
Oh, you bet that those people that pay the homeowner insurance and then the insurance
Yeah,
company need to pay out, like it's because they use the claim, those company need to find them like a appropriate
yeah,
housing for them to live,
yeah.
right? And from what I researched, the payout is it is a
Huge.
lot. It's huge. So that's definitely the most lucrative. And a house property depend on market, but generally the hardest one to, because the single family usually 3 bedroom, 2 bathroom, right? But then usually the more lucrative is like 4 bedrooms or more, because then it's less likely to easily find it. And that's where when they find your house that is a little bit bigger, that maybe they have a family that is more than four people or more, right? That they need that housing, then you would well position to less competition compared to other houses, and then you might be able to get that. If you have like a house that is near college town, right? Then the co-living, right? That what you just talked about, that property that could make sense because hey, like
Right.
actually, college student
They
usually
love that.
don't mind living with others, right? Making friends.
Absolutely. Like
Yeah.
fraternity house.
Yeah. So really depends on depends on the location and then what kind of clientele that would make sense to serve them.
Well, there's a person in Hawaii Sub 2. Her
Mm-hmm.
name's Jade Chen. She lives on the Big
Yes.
Island.
Mm-hmm.
And she's focusing on this exact segment, right? Because we had the big fire and on Maui.
Right.
There was 2,000 homeowners were displaced because their houses were burned down. 2,000. And so she's working with the insurance companies. The insurance company is paying the claim, and she's arbitraging the difference between the insurance payment and what she can negotiate with the owner.
Yep.
Right. So she's basically doing insurance rental arbitrage.
Yes.
Between, and she's just spending full time on it right now. Just
it is definitely very profitable, especially if she already have the network with the insurance, and definitely there's huge demand, right? And then for the arbitrage, when you have that, then all it takes is finding the properties style that really meet the family need, and then get to the furnishing, and ideally like get it ASAP, right? That the family can move in.
Right. Yeah. So that's what she's working on. There's 2 other midterm markets that look really good in Hawaii, right? I just want to know what your thoughts are, given your experience.
Yeah.
One is the military market, right? So in Hawaii, we have a very, very big military presence.
Right.
It's either the second or third biggest driver of economic activity in the islands. And so, a couple of years ago, when interest rates were low, a lot of military families used their VA benefit to buy homes. And they bought, obviously, low interest rate, very high property value homes. And so what inevitably happens is every 5 years, they got to move somewhere else. They got to change assignments. And so you've got a built-in market of people who need to sell. So if you're there as the buyer, they're probably more likely to buy it from you sub 2.
Yeah.
And then you take those properties and you midterm rental to the single soldiers that are coming in that need homes. Because my understanding from the people who are in this market is they don't want to rent out the whole home. They just want to rent out a room because they're single, right? They don't mind living with 3 or 4 different people in the house. It's a lot. They save money. And that's a really great win. So if you can imagine buying the house sub 2 and then renting out to somebody or a group of people who are predisposed to keeping the place really, really in good condition, because that's how they're trained, right?
Yes.
So that seems like a really, really good market.
It is. The military, it is one of the segment. If we think about midterm rental as this is a broad market, right? If we segment them about, most people would think about it first thing now because they talk about a lot about travel nurse, but it's only one of the segment. There are many, many different segments that you were in marketing before that like the different persona, right? The military, it is one of those.
Right. And so, so there's that one.
And same thing that people don't talk much about, like the construction. Construction is actually another segment that I have 2 guests like here over the last 2 months that they come and ask, why do you come here? And like where I live is not like a vacation or a tourist place. And the reason they come is because there's a Phillips 66 energy plant that they like every year they have a lot of people to come in from different state for like a month or 3 months project, and then they need housing, right? And many of them just drive across the state like to come. So obviously they don't want to buy all the furnishing and other things, right? So and those are really good guests. They keep everything so clean and very respectful. So I am pleasantly surprised.
Yeah, and I really like this segment. The other one that is getting maybe not as much traction here, but definitely in California, where my parents live, because they live in a retirement community, is assisted living.
Yes.
So if you can get really big homes, right, like a 7-bedroom home or something in an area that's not too expensive, where there's a lot of retirees, and that seems like a pretty good opportunity as well. And I've been looking into it, and there's quite a few people that you can either sell just the real estate or you can operate the business. Right. I'm more interested in just the real estate aspect, right? but it would be nice. I mean, because Hawaii is a really nice place to retire.
Mm-hmm.
If you can, the reason why Hawaii is nice to retire is because they don't tax pensions. So if you get pension payments, they don't tax it, and property taxes are very low. Okay, so you've got low property tax, and they don't tax pensions, but everything else is expensive, like food and everything else is expensive. But that's more manageable because your biggest cost elements are not bad. So it's not a bad place to retire. And I'll tell you what, if you're getting up in age, Hawaii is a really nice place to retire, right?
Oh,
So
tell me about that. I've been like Hawaii. When I share with people what's my buy box, I said
yeah,
state that are Florida, North Carolina, Georgia, and now I'm also open to Ohio. Like
yeah,
basically like
I love
landlord
Hawaii.
friendly, like landlord friendly state. And then I add
I love
Hawaii, and people like, huh? Why? And then
yeah.
I was like, oh, Hawaii is a little bit more personal.
Personal, yeah. I remember that. I remember when I first met you, you said that Hawaii was in your buy box. So let's take a look at this property. I want you to take a look at it. I'm going to get
Yeah.
all the details. Help me
Okay.
underwrite it. See if we can structure something that we can do. I'd love to do it. Right. If we
Yeah, I
could.
would love to
I just don't
underwrite
know
it.
if the numbers work. Yeah.
Mhm,
I don't know if the numbers work. I looked
mhm,
at it and I'm going, okay, it looks like it's high price to me. So,
mm,
but high price doesn't I mean, if we could either house hack it or it's multi-door, right?
mm.
In Hawaii, we have a lot of what I'm going to call quasi legal. I'm not going to say illegal, quasi legal properties where they have maybe multi-family properties where they're only zoned for single family, right?
Oh,
There's
so
quite a
they
few
they
of
they
those.
changed the construction of it without permit?
Don't Yes, without permit. So
Ah,
we have quite a bit of those here,
mm,
and so you need to just be careful about that.
mm,
But there's a lot. The zoning is very strict here. I mean, it's
mm.
really strict. I mean, in terms of like, because I was gonna build a house here, and then I gave up. I just said forget it. There's too many rules, right? Yeah, I mean, they said the roof could only be 35 foot high at its peak,
Oh.
right? I said, man,
Is that in, like, all Hawaii state, or is it in
no,
Honolulu?
it in different parts. So
Mm,
every area is different. So you have to work with an architect that you can do it, and you can only put certain size homes on certain size lots, right? So, and you can only put like some places you could put what's called an ohana house. An ohana house is basically putting in a separate structure on the property to be a second door.
mhm.
Now the state is encouraging that because it helps with affordable housing. Okay,
Mm,
so we have a really big affordable housing issue here in Hawaii,
right.
and one of the big reasons. So recently, just in recent years, Hawaii banned all Airbnb vacation rentals outside of resort areas. And they did that because everybody was turning everything into a vacation rental,
Yep.
Airbnb. And it was booming here. And everybody started complaining. All the owners, right, said, look, I can't park anywhere, right? I don't know who these people are. They're having parties, right? And probably the bigger problem was lots of homes that were used for affordable housing were taken out of the market and
Mhm.
offered to vacationers. And
Yep.
so now you have no place to put employees. You can't, service people. So they had to do it because it was just out of control. But if you know that, I mean, I have a unicorn agent here. So
Mhm.
he's absolutely, I mean, he brought me a deal just this weekend to fund. This one looked pretty good too. It's a short sale, bank owned foreclosure, a
Mm,
duplex in Kailua, which is a nice tourist area.
mhm.
And it was the land value of the property is over $1 million. They listed it for 325.
Oh
And
my
so,
god.
right, but it's up for auction basically.
Ah,
So they're going for bids. So my operator is going to bid 725 for it. The
mm,
land value is over $1 million. Okay. So I'm going to provide the financing for it, right? I'm going to
mhm.
be the P&L for it if he gets it, if he wins. So, I mean, that's the kind of deal. If you can get that kind of deal, then you can make something cash flow,
Yeah.
right? Because, okay, so um, So if you're seriously looking for something in Hawaii, I'm into midterm. I want to do something in midterm rentals. You got the expertise in it. We can potentially work together because I can probably find properties, and I just don't know how to underwrite. I have no idea. Right.
I love running numbers.
Yeah, I can tell. So let's do it. Let's do that together. It sounds good.
Sounds great. Sounds great.
So before we conclude, what else are you doing? That was a great discussion, right? Are you doing anything else in real estate?
Yeah. So a few things. So one is I'm super excited that I'm gonna work with two other ladies and then start our podcast and YouTube channel that focus on sharing women in real estate, and really with the intention to share that, regardless of the age, race, and occupation, that there are women who are really killing it in the real estate, that we want to share their stories as a source of inspiration, that for other girls and women that may be still on the fence or may find real estate very intimidating, right? That by hearing the stories that they can relate to it. And some may be in full-time real estate investors, and some really might be um, uh, a, 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 a working mom or full-time mom, or some maybe already have a grandkid, and then some maybe in their 20s, and some maybe still enjoying their W-2 job. The point is that there are really a lot of diversity in the stories, that we want to encourage people to choose their own path, that they don't have to take a certain way, that regardless of their personality and where the circumstance, there's always creative way to get into real estate. And the other thing that I'm also excited about is I've been chatting with some others in the sub community, and I have the thought that maybe we could create an affinity group about Asian investors, Asian creative finance, that in real estate and even in buying businesses.
I'm in on that.
Yeah.
You can count me in on that. I'm definitely in that.
Yeah, because there's sort of shared cultural background that just yeah.
There absolutely is. I totally agree. And I'll tell you, there's not many things. I mean, I'm American born, okay, American born Chinese. And I grew up where there are no Asians. Okay. So I had a particularly difficult set of challenges. But I did pretty much what every Asian does, right? Which is their family says, you got to go get a degree in engineering, business, law, or medicine, right? Do one of those. And then just work as hard as you can in that area, and then you'll do well, right?
Yeah.
So I did that. I did that path, but that wasn't the path that was really for me, right? The path was being in my own business. I went the engineering path. I did it for 20 years. I loved it. I did well at it. But what my real passion is doing what I'm doing now, right? And there's so many people that are like that, right? In this community, and just people like you, people like me, other people that we're dealing with, they're all doing well in their own way, and we should work together. Absolutely.
Yeah.
Totally agree.
And it's also come together, right? Maybe come together because the shared interest of real estate, but stay because there could be developed friendship.
Food. We got to just bring our food.
and then the other thing that it resonates with people, that for Asian culture, somehow we grew up with the expectation from parents and schools that you got to study really well and you got to be independent and competent. And so when we encounter problem, we first think about how instead of who, right? And that serves us well to a certain extent. And then for us to get to the next level, like really the collaboration, the partnership, and community, that's not something that is very much ingrained in our culture. That's something that we need to learn, right?
Yeah. I mean, Asian culture. I mean, first of all, there's many Asian cultures. Chinese, Japanese, Korean, Southeast Asian, Thai. The Pacific Islanders. They're all different, but they're different, but they're common as well, right?
Yes.
So living in Hawaii, we're a big melting pot, right? We're majority Asian, the only majority Asian state in the country, and it's definitely more family oriented. I mean, we have a word called ohana. Everybody's ohana, and whenever you meet people, no matter who it is, the children, they call you uncle or auntie. Everybody, no matter who it is, right? So we really have this really family-oriented culture here, and that really stems from the Asian heritage of most of the people.
Yes.
And we have, I mean, like the food that we share. I mean, when I said that, I really meant that.
Hmm.
That we're always having potlucks. Potlucks are a very, very big thing, and you get to try all the different Asian dishes because everybody's bringing their own thing, right? So if there was a way for us to do meetups and get together in different places, then that would absolutely work. It would work great, actually, right?
That's
Um,
amazing because I'm a little bit different in a sense that I'm not only Asian but also Asian immigrant.
yeah,
That I identify, and I would say the culture in Hawaii will be a little bit different, and even inside United States, the different state could be
mhm,
a little bit different.
very good.
The first
Yes,
couple years when I come, like starting as an international student, is
difficult,
it is
difficult.
difficult. After like first when I started my job for the first couple of years, pretty much home office,
Yeah,
and then who I consider friends. I felt it was so easy to make friends when I was back in my home country, like growing up
yeah,
and went to college. And then when I come here, then it's not as easy to connect, and maybe because I'm an introvert. So I'm super excited to connect with
that's
Asian
part of the reason.
in
Yeah,
a sub two community, and
yeah,
I felt really welcome. So it's
yeah. You will be. Yeah.
yeah,
Well, sub two is welcoming,
yes.
first of all. But then, if you're Asian, then you have another form of connection, right? So, I mean, I resonated with your story immediately, right? Everything that you were saying, I knew that you were a person that I needed to talk to, and so I talked to you a couple times, and so there is that affinity, just because we're Asian, and I'm
Mhm.
Chinese too. You're Chinese,
Yep.
and and so there's there's shared culture things
Yeah.
are are you like for me it was the opposite when I grew up. I didn't have those cultural connections either because there
Mm.
was hardly any Chinese people, Asian people. The way I got it was I started traveling to Asia, and
Mm.
that's when I learned, oh my God, look at this, there's more people like me. Like when I was a kid, I had to go to wedding banquets every weekend, right? It's like I don't even speak the language and I have to go to these things and I didn't want to be there, right? But then I met people that were all doing the same thing, right? And 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 so then I learned it was okay to be like that. And then so when I got into the work environment, then I met a lot of people because in tech there's a lot of
Yep.
Asian people.
Right.
So then I got a lot of friends at work in that way. And so that's similar, right? When you do
Mhm.
sub two, we're in a real estate investing community, and we're working together. Like I could see us absolutely. I could see you and me looking at this project and then evaluating. And if it works, we would do the deal, right?
Mhm.
I have no doubt that that'll happen if it's worth it. And there's comfort in that, right? In working with somebody that maybe shares a little bit of your cultural background. And
Right.
and so I think it's a really great idea. If you do
Yeah.
it, I'll join. Absolutely, I will join.
We'll do it.
Okay, great. So, is
Awesome.
there anything else you want to close with before we end this podcast?
I very much enjoyed the conversation, Jim. Thank you so much for inviting me.
Okay, great. Then let me go get information on the property and let's look at it.
Okay.
Okay.